So here's what you have to understand. Texas overpays anywhere from 103 to 160 billion dollars annually into the federal system. Okay, so that's an overpayment. So what that tells you is that any federal dollars that come into Texas first come out of your pocket, go to Uncle Scam, take a haircut, and then get pushed back into Texas with a bunch of strings attached. And those strings generally involve forcing the state government to raise taxes on you to match what the federal government wants to send, right? So you're kind of paying for it twice, but that overpayment is the key. The overpayment. So an overpayment essentially means that when federal money comes in, it actually came out of your pocket first. Now, it's interesting because the question about whether or not Texas pays more or receives more has been a point of contention. Okay, and it's been a point of contention for a very long time. You will have the pro-DC status, the progressives say that Texas is a recipient state, right? That we get more money than we put in. But that's because they are really crappy at math, okay? 2005, Tax Policy Foundation did a study and showed that absolutely we were paying more in than we got out, but they don't want to talk about that. They don't want to talk about that. What they want to do is they want to calculate this thing wrong. Here's how they cook the books. They cook the books by taking all the federal revenue that comes out of Texas and then taking all of the federal revenue that comes into Texas, and that is their calculation. But that's not a fair calculation, and here's why. Take something like federal pension benefits, okay? So if I'm working and I pay into, say, Social Security or any of the federal pension plans, I pay into that. And then when I go to collect, I go move someplace else. Well, I paid in from here, but it's being paid out to a different state. So when you look at federal pension benefits, or really any of those funds that are being paid out, right, the obligations between the federal government and the individual, so that'd be federal pension benefits primarily, you have to take that out and calculate it completely separate, because number one, everyone gets a chance to pay into it no matter where they live. That also means that they can collect it no matter where they live, including not living in the United States, right? Federal pension benefits can be collected no matter where you live, with the exception of a handful of countries, right? Like North Korea, Cuba, Iran, places that are under banking sanction, right? So that's why all of these things tie in. So security question, everything else. So what they do, though, is they leave that in there because you have a lot of people that are fleeing those other states and retiring to Texas. So they say, well, that money, Texas couldn't survive without federal money. Well, that money doesn't go to Texas. That money goes to the individual that happens to be living in Texas that earned that federal pension payment. Okay. So that's how they cook the books. Now, one thing, so when we released our study that we did in 2015 and then updated again in 2017, and we're in the process of updating it again, the only fair way to account specifically for the fact that they create the federal government's money that comes in actually creates an additional tax burden on Texas taxpayers is you say, this is how much money is sent from Texans to the federal government. This is how much money is sent from Texans to the state government. That is a revenue pile, okay? And then you say, this is how much money comes in from the federal government, right? How much they're paying in. And then over here, this is how much the state budget is, right? This is how much it's costing to operate the state government. So you take those two, right? So you have a revenue side and you have an expenditure side. The revenue side accounts for how much money Texas taxpayers are generating right now, right, with the existing tax burden as it is. And then the expenditure side accounts for how much federal money comes in, plus all of those federal matching funds, right, that are the state matching funds that go to capture that federal revenue. And so and then you take out any of those obligations that are between the federal government and the individual that can be collected no matter where they live, like federal pension benefits. You take the revenue and the expenditures, and you do your math on it, and what you come up with is year on year, and it varies, but the overpayment by Texas is about $103 to $160 billion that Texas taxpayers overpay in the federal system. So what that tells you is, and that was the conclusion of both of the report back in 2015 and 2017, is if you take the federal government out of the equation, right, and you take the same amount of revenue that Texans are already paying, you have the ability then to effectively recreate everything that the feds do here and still save $103 to $160 billion annually. Now, does that account, it's not talking about how do we collect that? How do we capture that? Well, that's a whole other conversation, right? But the thing that you have to do when you talk about this particular issue is you have to compare apples to apples. The debate that was brought up in this Rags article, right, is that Texas could not survive without federal money, right? So you rebut that, right? We're not talking about how to capture it because they didn't talk about that. That's a whole other conversation and a whole other debate that we can totally win, right? If we want to talk about that, we can. But the debate, right, their assertion is that Texas cannot survive without federal money. And our counter to that is Texas can not only survive without the federal money coming in, but we will thrive because it gives us an opportunity to reduce the tax burden on Texas citizens, right? To put that $103 to $160 billion back in the pockets of Texas taxpayers, circulate that thing through our economy, jump us up from the 9th largest economy in the world to the 5th or 6th, just that one action alone, right? I mean, so, all of a sudden now, what they're saying as an argument actually works to our advantage. Because now we get to point out the fact that we're paying more to those jokers than we ever get back. And the one thing that we are accounting for in the new report that we did not account for in 2015 or 2017, that we are doing the calculations on, is how much of the federal money comes back into Texas that is actually debt, right? Because let's remember, the federal government is really broke, right? Deficit spending is at an all-time high, right? The federal debt is $31 trillion. So the question becomes, do we even count a single federal dollar that flows into Texas as being a federal dollar, since ultimately it is an IOU to someone else that we have to pay, or our children have to pay, or their children have to pay, right? So even when the federal government's pumping money in here, it's really not their money. They're just borrowing it against our name. So, if we're going to talk about what the impact of federal budgetary policy or monetary policy is, you got to have debt. You got to have that conversation about the federal debt. You cannot have the conversation without the federal debt. And look, that's a ticking time bomb, folks. We're $31 trillion in plus in stated federal debt, not to mention the probably 50 trillion plus in unfunded liabilities. In the things where they have attached your name and your children's name and their children's name and their children's name and their children's name as the person who has to pay the debt. So who cares? It wouldn't matter if they provided every single dollar in here, because they're borrowing it in our names. And ultimately, we'll be the ones that have to pay it back unless we tax it.